gold for this weekly webinar. Let's get straight to it. So, we know that from this scenario that we're looking at, we're in a bullish market environment. Why? We've induced sellers. We've induced sellers here. So, now, whenever we see that I reiterated in the previous webinars, whenever we see this big move to the downside, we can expect and anticipate there to be some sort of slowish price action on the intraday time frames. I wouldn't want to use the word slowish. Let's just say it can get a little bit difficult to dissect because there's going to be times where price induces sellers and then traps them, and then you could kind of get mixed up in what you want your bias to be or how you're framing out your bias to look like. So let's take this for example, right? Say how we induce buyers. So most of us could probably say, hey, okay, now we can go bearish. But in another sense, we still haven't taken out that liquidity. So let's really dissect this price action. So after inducing sellers, taking out this low to the left, we had this high that became the inducement high here. But liquidity on the higher time frame, essentially inducement from the left, hasn't been taken yet. Where is that located? Here's the easiest way to spot it. So sometimes if you guys don't really know like how to spot where price is reacting off of, just look to the left, see what caused this move. So every time I'm looking at price, I'm like, what caused this move to happen? And that's right here. So if you want to just drag it out, oh god, if you want to just drag it out, that candle reacted off of this area and then sold off. Therefore, that gives you a framework to work with as far as letting you know that, okay, this is now our inducement high. We have higher time frame liquidity at the highs. Now once it's sold off, once these lows are taken, as soon as this lows are taken, now we have engineered liquidity above here. So now that we know that we have engineered liquidity above here, we have reasons to buy. But we can't just buy as soon as a low is taken. We have to we have to look at our criteria and see if that matches up. So we take this high out from the left. So let's go on the lower time frames because I've seen a lot of people catch some entries in this range. This was kind of this range wasn't so easy to work with right here, because one, here's where I would have said I'm leaving this price action alone. Once we took these highs, I would have wanted to stay away from any sort of buying, just because now we have all these lows to the left. But if you look here, let's move this. There was some sort of long entry before that. So here we have LB, right? We took out this low here, inducing sellers. Price comes back, respects this area first. So notice how we respect the area. Like I always like to say, we leave the inducement high, we respect it. That's what we want to see. We want to see that get respected and price move away, meaning move away, take out liquidity to the downside. So notice how we get this area of liquidity. Why this one specifically? Notice how we respected this buildup, this area of early buyers trying to buy the market. We tap into it, and then what will we do? Induce buyers. So now early buyers are getting into this market from here and from the low to the left. So there's your inducement low, Have a liquidity block below. And then that's long opportunity number 1. This is London session 530. I wasn't unable to take this because I don't really trade London session. And then just easy target to the highs. I mean, target partial at this high, at the inducement high. And then you also have the high to the left. So partial there, full target there. So that's trade number 1, and that's all done on the 15-minute. You don't even have to go lower. Let me see. I have to, since I'm not on my monitor, guys, I have to kind of flip back and forth from Discord just to see like your questions. Yes, it is recording. Don't worry, I got you guys. Little sound breaks. Is there still any sound breaks? Yes, like, am I cutting in and out? So who cannot hear me? I see the mic moving pretty fine though. I see the mic moving pretty fine, so it probably might just be you. Heard you, but breaks. Yeah, try joining and try leaving and joining again. Let me know if that works. Voice a little low. Voice a little low. Is this better? Hold on. You hear me just fine. Well, on the OBS side, it says I'm fine too, so. It says my mic's perfect. Okay, cool. It's just a couple of you guys. Turn up your volume. Do something. Help me out. Bear with me. Because I'm not at the usual setup, so sorry. Alright. Like I said, partial at the inducement high. Final target to the highest to the left. Notice how we come right near the target, and price just shafts you. Like this is like rage inducing. I can understand. Nobody would want to sit through this, as far as not taking any money off. Imagine if you didn't take any partials off and price just smooths away from your TP and almost takes you out back a break even. Like, that's actually annoying. In any event though, I would have, if I took in this on futures, I would have had to close somewhere around here because it's 4 o'clock. It'll automatically close me out of my position. So if you're trading futures, you would have got lucky by price taking you out somewhere around here. But in any event, let's continue with price. So we take out the inducement high. We're still respecting this high to the left though. So buys are still paramount. But here's the thing. It's kind of hard to frame out some buys whenever you have all these lows intact. Like, when you look at it from a perspective, what you see is, yes, we're inducing these lows by taking out these lows. We're inducing sellers, and we're mitigating this liquidity block. But look at how much liquidity we're leaving to the lows. So it's kind of, it's a discretionary period now. Whenever you're dealing with these type of scenarios, you want to really either lower your risk or just probably stay away if you're unsure. I was unsure. I stayed away. Here's another one. Here's 2 opportunities that happened on Monday. Tuesday. So here's what we had. I was waiting for this inducement low to be taken first, right? Before we've taken out this high. I wanted to long directly below here as soon as this low was taken, but I wanted to see price respect this first. So from this instance, see how we got that respect there? I wanted to see price dump off immediately to the inducement low, then I long. That would have given me way more confidence in taking this long position than just waiting for the price to take this high and then come back to this low. I just see that it's highly unlikely to just see price take out the high first, then come to the low, and then still move bullish. So let's go over this price action because there was two trades. There was actually a counter bias short in here. So we take out this inducement high. Why is this inducement high? High, low. What do? We induce sellers. We induce sellers by taking out this flow to the left. So we also had a reaction here. Build up. So price took out some lows here. I don't know why it keeps doing that. Inducing sellers again. Sellers trapped. We form that LB. Let's keep going. Price action. So, in any event, what you have here is a potential aggressive entry. Now, very, very hard to take. Just because, one, you have these higher time frame highs intact. Still, to the left. So, you'd have to be really careful with your risk if you were to take some entry like this. It's basically anticipating price will still engineer more liquidity and take out the inducement low. So you would only aim for this target, the inducement low. Why? Look at all this buildup of price action here. All this buildup of price action here. That would possibly be the only target for that counter bias trade. So if you were looking to take a position as well for the long side, I would advise you, since the high was taken first, to wait and see if this LB holds and see if you could get some sort of confirmation entry. So you get some sort of confirmation entry, but in PM session, which is kind of strange. So here's what we get. Now we have inducement low here. Where's my inducement? I mean, not inducement low, I'm sorry. Inducement high. Inducement high Y. Remember, from high to low, we just induce sellers by taking out the inducement low. So we react from this high. React from the high. That's what we like to see, guys. Remember, we want to see price respect the inducement high and move away. Move away, why? Move away being what? Taking out the low, sorry. Taking out the low, and what do we have below? LB. Now, here's where it could get conflicting. See how all these lows are being respected? It can kind of get, your confidence might not be there. I know for sure my confidence wasn't there taking any sort of long entry as I see all these lows being respected. And even though we didn't take the high yet, you could still see price induce sellers first before taking the high. So kind of hard to take, but there was opportunity. There was opportunity. So if it's the plan, inducement low taken, inducement high respected. Easy partial at the inducement high. I'm trying to drag the line over. Easy partial point here. And then, final target. Those higher time frame highs. So, keep going over price. Let me look at the Discord chat for. You hear me loud and clear? Okay, cool. I just have to keep checking on my laptop because I'm not at the computer. Okay. We ended up taking out inducement high. Cool. And now we see price run up, run up, run up. Boom. Targets hit. So now this target's hit. I personally would deem this trade here low risk. Low risk being higher probable. High probable. And these two trades here, I would deem these two trades high risk, lower probable. So Me personally, in my trading plan, I have a protocol on how I would approach these two categories of trades. So a higher risk trade, I would have half of my risk basically. So if I'm risking $500 per trade on a high risk position, I'm willing to only risk about $250 per trade. So take that if you want it, if it helps you out. Just know you have to differentiate your trades to make sure you're risking an adequate amount. So we ended up trapping sellers. So now sellers are trapped, but there's still liquidity in the market. There's still liquidity in the market, and that's above here, this engineer liquidity. So we still have to be mindful of that. Still have to be mindful of that. Our bias is still bullish on a higher time frame. So what does price do? After we trap sellers, we then sell off, inducing sellers. So we take out a low to the left, and we respect this area. This area is a liquidity block area. So we know that we're bound to have some sort of reaction from there. So now that we know we have an inducement high that was created, inducement high was created here, and we know that we could potentially have a scenario where we can buy into that. Also, guys, I've been doing some little work where I can eventually send you guys. It might help us, kind of dissect certain entry models to where we can just see a repeatable process, and something like this, right? Where we see sellers induced and then we see our inducement high. We could potentially find the entry in here. That's our goal, right? We want to find an entry somewhere here. We want to find something in these particular scenarios where we can buy, catch these moves. Like here is a particular scenario. So what I'm working on is just building something to where we could see it clearer. I'm just gathering the data, seeing like where have I missed trades that fit the plan that we could potentially be taking. So more details on that coming soon. But we have inducement high here. Inducement high here. Okay, why is inducement high? Remember, from high to low, we induce sellers. We know that. So what I like to see price react off these areas. I like to see price react and move away. Yo, there's no way that keeps happening to me. Okay, so we react and we move away. Here's what we do. We take out this low. Now, me personally, I wouldn't take the buy straight off of here because the RR just doesn't make sense. You see, the RR just doesn't make sense. So I would potentially wait for some sort of confirmation entry. So now that I know that, hey, we formed a new LB by taking out that low. So now that I know that we formed a new LB by taking out the low, I just need to see what next. I need to see some sort of build up or trap move. I need to see price take out inducement low as well, because we already have two key components. This price respecting the inducement high and moving away, taking liquidity, which increases the probability substantially, and we also have a liquidity block below. So this is all that I want to see right here. So we take out this inducement high here. It induces early buyers, yes, it induces early buyers, but we still have a bias that we can buy from, because let's go to the 1 minute. This inducement high was taken, yes, but we still have a liquidity block, and we're still respecting this inducement high here. So we are still in congruence with the trend. We take out this inducement low. The extreme. This is actually the extreme because you would say this is your inducement low here, because look at how this was the last low before it took out the high. But in this scenario, all you have is this. If we were to draw it out, just that's literally all it is. And the price comes for the extreme. That's literally all this price action is. So take that out. I like to see how price gives that build up reaction. That's what I'm looking for. Looking for early buyers getting in the market above any sort of build up, any sort of inducement low, or any sort of inducement high. I want to see some sort of build up whenever we get some sort of reaction to these trap moves. So then we ended up taking out this inducement low, respecting liquidity block, entry, target the inducement high. So yes, there is still liquidity in the market at the engineered liquidity highs above here, but with this push move, this move down was so strong, right? We saw that we already had an inducement high target. I'm not going to be targeting anything here because there's no engineered liquidity in this space. There is no engineered liquidity here. Price did not react off of no areas here, induce sellers, and then give us reason to target it. But it did that here. Since it did that here, there's no reason to target anything else above at this moment. So price takes that high. It looks like there was another potential entry as well. Hold on. Sorry about that. Looks like there was another potential entry. So here's what you get. So since we take the low, inducing sellers, we create another liquidity block. Respect here. Price takes out the inducement high. Traps early buyers. Notice how we get that same reoccurring thing we want to see. Price respecting the build up, respecting price above. Then we take out this high, inducing early buyers. What does that do? That induces buyers to want to buy here as well. They get trapped. So they get trapped there. Confirmation entry number 2. Me personally, this low could be taken, so I would just keep my stops below here. If I'm in a scaling, I'll just keep my stops below here because I'd rather be conservative. Because price could do something like we like to call re-inducement, where it takes the low, could end up taking a low and then still respecting this one to the left and then going. So I just want to have my stops safe. So that's another potential entry there. 2 entries into this inducement high. Pretty clean. So once we take out this price action, this inducement high, we trap sellers. Sellers have now been trapped. Now, I was looking at gold from a standpoint of, okay, we just trap sellers. Now we have all this liquidity to the downside. There's no way that we run up to this engineer liquidity high before we take out these lows. Now that is just like an intuition, an intuitive standpoint. So here's what we do though. So what we do here is we induce sellers after taking out that high, yes, but we also take out this inducement high now. So now we have induced sellers and now we've taken out inducement high. What's this? LB. So since that's an LB, we can anticipate price to respect this area. So we ended up respecting this area. Me personally, there's no need for me to take direct entry off of this just because, one, there's no liquidity down here. There's no reason for me to target this area yet. All we did is just induce buyers by taking out the inducement high. So we do that. Price sells off again, inducing sellers. We ended up respecting. We end up respecting this liquidity block still, even after creating a trap here. So here's where liquidity gets created, right here. This is where you want to focus on. Notice how we now tap into this area and buyers just got induced by taking out this inducement high. This entry, I promise you, this is a very hard entry to take, because who's to say this high wouldn't get taken? Who's to say? And timing is off. This is right at market open. So impossible entry for me to take. I'm not going to sit here and lie to you and say that you could have taken this. I doubt anybody could have taken this unless you've mastered everything about the strategy. Okay, early traders should be trapped. Okay, just checking in on your guys. Just checking in. Okay, so now we start to trade into these lows now. This is what starts to give us some sort of conviction and letting us know, okay, we're starting to build liquidity at these lows now. So now I'll drag a line, drag it across, because we started to trade into these lows. And what do? We started to induce buyers. I can't draw a line for nothing, guys. I'm sorry. So notice how we're inducing buyers at this low. Literally off of nothing. Price is respecting these areas. Still respecting this area. Just drag it out. Notice how we're still inducing buyers. Still. Come lower. We're just generating so much liquidity into the market. Drag the low out even further. Okay, so here's the price action that we get. On Thursday, here's what I saw. As soon as I opened up a gold chart, I saw that we induced sellers. So I know that we have an inducement high here. Yes, we have an inducement high here, but what also caught my eyes, why did this sell-off just happen? What caused the sell-off? What did it react to? Drag out this candle. See how you have that little buy to sell wick that ends up taking out this low? If any of you traded supply and demand in the past, you would know like this could be some sort of area of, there's some sort of POI or supply area. So just drag that out. See how price has been reacting off of this build-up area, engineering all this liquidity in the market. So just drag out the top of that range. The accuracy is insane. So it ends up taking that out, creating a liquidity block. So as soon as I seen that liquidity block being created, here was my initial entry. I saw price respecting this low. As soon as this high was taken, this little high was taken, sell. Me personally, you have a partial point here. Here was my original partial point, and I didn't manage this trade well at all, because once I saw price take out this high, I was like, okay, it could potentially take me out BE, so I just closed it. And then as soon as I close out the trade, I see price die, and I had my higher time frame targets set to these lows as well. So as you know, I was very upset, but just the trade, just me being on the right side of direction just gives me the confidence that, I could catch another trade like this. So that's gold, honestly. Like, it gave a lot of opportunity in this range. Not the best of opportunities as far as it being, the highest probable, but you could still frame out some sort of opportunity even from a higher risk play. So also, if you wanted to take another entry If you've missed this intricate entry here, this is now LB. Let's go to the 1 minute. That area that I taken the trade off of is now LB. So as soon as that inducement high is taken, because here's what price reacted off of. This low created this inducement high. So once that sold off, you have your LB right here. LB right here. As soon as inducement high is taken, you take that entry to the lows. You would have been in that trade, in and out of that trade in at least, what, 20 minutes? Insane. And look at that move, man. That's insane. So gold, I can't lie to you, gold provided. I doubt gold will do anything next week as far as give some sort of opportunity like this, because, man, gold just would have paid the whole community. So, you think we need more videos about inducement on the course? I mean, I think it's pretty straightforward. I don't think we do, honestly, because when you really think about it, there's a video on it about the theory of it, and every case study goes over literally whatever I'm just going over right now. So I don't really think we need more videos about it. So that's gold. I didn't really look at any sort of price action on Friday. I didn't trade Friday. I just didn't have the stomach for it. So we're not gonna go over that. We're gonna go over NQ though. NQ was pretty interesting. So, as you know, on the higher time frame, let's look at this. As you know, we've traded into this extreme. Yes. So now we're bound to have some sort of reaction. So we still want to see price to the downside. I know I still want to see price to the downside after we induce buyers. But here's what happened. Since we took out this high, right, inducing buyers, giving us that BOS in the market, we can anticipate these other areas in the market to induce sellers. So although we framed out, most of us probably framed out price coming above this high, it just didn't need to. Price just didn't need to come above that high yet. Why? Because one, we've already induced buyers. Who's to say we're not just engineering liquidity by reacting off of this high and moving away? So sometimes, even me, I can get a little bit ahead of myself. That's why I try to break down the strategy in steps to where I can really understand it and it resonate with me. So if I played NQ like this, I would have been able to catch, these sells, because now that I look at it, it kind of was clean in my opinion. So if you look at it from this lens, right, we had that BOS in the market by taking out this high to the left. Notice how we BOS here. We BOS here. It's going to look cleaner too as soon as I go on the other time frames. We come here. We respect this low that retail was getting into the market from. So we respect that low, and then we induce buyers again. Yes, we took out a low, but in any event, that was just a trade back up. So notice how this price action, all that is this. Inducing higher. And that's after taking out a low. That's after taking out a high from the left. So we have to imagine if we're buying, we were essentially trying to buy from this. So that's why, you have to zoom out and look at what's actually going on in a higher time frame. So, like I said, if we're looking at it from a step-by-step process, higher time frame liquidity has been taken. Yes. We're just building liquidity now by reacting off of this area. Yes. But we didn't engineer liquidity yet because we didn't sell off. So since we didn't sell off yet, there's no engineered liquidity at this high. So we could be playing a pro trend move by selling the market. So let's go on the lower time frames. So we're reacting off of this price action from the left. Yes, we know that. Creating some sort of build up area here. Notice how we have this price action that builds up off of this candle. Why this candle specifically? Just look at the reactions. We react here. We react here, induce buyers. We react here again. And induce buyers again. So why are we still buying from this low? Is the question, That's what I was telling myself on Thursday. I stayed away from NQ, honestly, just because I was so focused on gold. But in my opinion, I don't think there was any sort of reason to be looking for buys on NQ. Yes, we did induce sellers here, so I could kind of understand how there could have been a long opportunity. But in live price, I don't know, this just probably would be conditions I'd stay away from. So this is what we get. As soon as I see this price action, BOS in the market. Why BOS? We also had a build up at this area. Let's look at it to make it cleaner. So, as we see, this candle was the candle that took out all these lows. From here to here, we induced sellers. So, we've also had multiple reactions off of this high. Reaction here, letting me know buyers are getting into the market here. I don't want nothing to do with this price action. Whenever I see price, respect it, move away, respect it, move away. In any event, if I was looking for buys, I would have wanted to look for buys below here. But as soon as this high was taken, all of that's out the window. So I would have wanted to see price respect this high, take out this low first, then we target that high. But we didn't get that. So now buys are off the cards for me as soon as that happens. So we take out that low, take out that inducement high. We come down, respect this area. Starting to move away. Look at all this buildup of price action now, guys. Look at the trend line of death we just created here. The trend line of death. I'm trying to copy this. How do you copy? Okay, there we go. So we then also induce buyers by taking out this high, one, and we also take out something from the left. Notice how we have this price action here. So this is kind of important. So this reaction point produces an inducement high. This reaction point produces an inducement high because the last area before this low gets taken is where price generally tends to return to. So where can I mark that out? It would be this high right here. This high was the last area before it took out this low. So drag that out. Let's drag it out, and I bet you it took it out. And to the T, it took it out. I cannot draw a straight line. I cannot draw a straight line. Okay, so we take that out. Cool. That high is taken from the left. And what do you know? Price was reacting off of that here as well. So we can take up this whole area here. Notice how price is reacting there as well. Cause that build up to happen. Sellers trapped. Sellers are now trapped. We form an LB here. LB formed here. Price creates this type of price action right here. How do you do it? Like boom, boom, and then we just boom. Sellers trapped. Sell right here. Kind of a hard sell to see in live time, I can't lie to you, just because of the fact that, you know, if you're so set on a bias and you're so set on looking for buys, this could be so hard to spot and dissect. But it all starts from the higher time frame, guys. It all starts from the higher time frame. So could have took this sell, SL covering this liquidity block, targeting those higher time frame lows. So the market just provided ample opportunity on Thursday. Ample opportunity on Thursday. I think this is pretty clean price action here. Is it not with structure? No, it's not with structure. I wouldn't say it's with structure. I'm going to tell you why. Yes, I see that we did take this out. Yes. But remember, look at where we're trading from. Look at where we're trading from. This is with structure, no? BOS here. Sorry. I can't put the freaking thing. Is this not with structure? BOS. BOS. Look at the liquidity we're building and we're still respecting this low. How is that not with structure? All we did was sweep this area, sweep the low, still trading in this area here. Come up, take out internal and then sold off. So I disagree. I don't think it was with structure. Or we could have even took a direct sell off the first sweep of the left. Yeah, you could have honestly. Or we can take before on these where you put LB, take short, put SL on high. Yeah. I mean, honestly, this is why I try to stay away from having some sort of bias as far as like me wanting to see what price is going to do instead of just looking at what price is telling me. Because half the time I'm unsure or I just get caught up in the other side of the market. So I wish I was in one of these trades as far as NQ and gold, but unfortunately I wasn't able to stay in the move for gold just because of my own mismanagement, and I just stayed away from NQ just because I was unsure. I knew these lows were potentially going to go, but I didn't know how I would potentially catch an entry. So all in all, good price action, great learning experience though for me. Great learning experience for me because now I know how I'm going to approach managing my trades, and now I know how I'm going to approach the market on a higher time frame perspective. Like I said, seeing it in a step-by-step process makes it even easier because now that I see this, now there's potential engineered liquidity above here. But we have to also remember there's engineered liquidity here now to these lows. So do we have to take this out yet? Possibly not. We possibly might run lower first and then come higher. So it's all a waiting game. You never know. That's why you have to wait for price action to print, react, and see. But that's all I got for a review, guys. If you guys have any questions, I'm more than, welcome to answer them. We have about 5 minutes left. If you guys have any questions, we could go over that real quick. Don't worry, I'll make sure the recording also gets uploaded pretty quickly. Is it clean? Can go over NQ from yesterday. Potential to take a long. Indicator, no. Just possibly going to make some videos on just explaining theory behind the diagrams that I drew and just showing multiple examples of them happening, like, so you could basically think of it as me dissecting sort of price action and then naming it a specific scenario, and then just collecting data on that specific scenario, me seeing it over a period of time. So, once I have a sufficient amount of data, once I have clear cut execution behind it, data behind it, I will, bring that to you guys. So, but is it clean to go over? Yeah, I'm gonna go over NQ real quick. How do you know when liquidity block is used? I don't know when you can expect the videos. That all depends. I just want to make sure, like, I have a great understanding of it and I have data behind it. I don't want to just drop something just to drop something. I gotta make sure, I have that down mastered. I have, evidence behind it too. So we'll see. It will be soon though. Later. Hopefully Q2. Hopefully Q3. We'll see. How do I know when the LB is used? I mean, if you're inferring to an LB like this, you could say this wasn't used yet. We take some sort of internal. It was actually this high here, but we can all get that intricate in hindsight. So honestly, this whole area is a LB. As soon as the inducement high is taken, you can take the sell. This LB is not used yet until internal's taken. Let's go over gold. This LB wasn't used yet. We got a sweep with the internal used. So now, but we create another one with that sweep. So this inducement high gets taken. LB right here that got created from that sweep. Use it with that entry. So this in this scenario here, right? This is where you can say that LB was already used because we induced this high, and it creates this one. So you can say LB has been used here. But notice how it still gets respected. So that's a scenario where it's very hard to take an entry here, because who's to say that this LB won't get taken? So I kind of hope that answers your question, because I know I had a specific question like that early in my journey. So easy. I wish it was easy, man. Trust me. I would be so up for this week if it was easy. I won't be on the charts Monday because... Wait, Monday's a bank holiday. That's crazy. But that's not why. It's because I'll be celebrating my birthday. So that's why I'm not going to be on the charts Monday. So even though the setup presents itself, you lower your risk when there is liquidity below in a long scenario. In that scenario on gold, yes. Like if I see that there's liquidity on both sides, essentially, because in that scenario, liquidity was on both sides. So over here, right? Let's lock this down so I don't delete anything. So over here, right? we can say there's liquidity on both sides. We have this low that's been respected how many times? Like 5 times. We also still have this high target. So if I'm taking this long here, because this is my high risk long here, if I'm taking this long here, I'm generally lowering my risk 95% of the time. Just because of, I know that price could easily dump, take out all these lows, and then move up. That's the higher probable move that I would see, that I would anticipate to happen. But as soon as sellers get trapped, buyers get induced, we take out the low. Now I'm in better conditions because now, one, I have an inducement high target. So I have my target framed out. We respect move away. Now there's engineer liquidity. So now I have a framework to work with that gives me higher probable conditions than just having liquidity on both sides and just seeing price respect and induce lower. Like here, I love to see this. I love to see price respect the inducement high and then take the inducement low, have a liquidity block. I'd love taking that trade. But just that fact of having these lows to the left being respected makes that all the less probable. That's all it is. Yeah, Monday is apparently President's Day, which is crazy. How much do you just reduce your risk? I mean, that all depends on your account size, for one. It depends on your drawdown for futures. So I just reduce it depending on my available drawdown. I like to trade with at least, so let's say my drawdown is 2,500, or 2,000. The average 50K is 2,000, right? So I would not want to lose more than, my daily loss limit would probably be $500, right? So I obviously don't want to trade my daily loss limit every day. So I would use 30% of that. So possibly I would cut that in half. $200 would be my risk on a high risk trade in that scenario. But if I'm taking a high probable trade, I know I have a daily loss limit of $500. My risk would essentially be $350 to $400. I would risk more of my daily loss limit on a higher probable trade. But then that would leave me using only potentially one trade for that day. So, yeah, guys, I mean, that's all I have for you guys this week. I mean, pretty good price action to go over. I hope the audio is pretty good. I'm not at the usual setup today, and just let me know. Give me some feedback whenever the recording comes out. Just let me know if there's any problems. I'll try to make sure it doesn't happen in the next one. Why did you mark that high as BOS and not the previous high or the lower one? On gold or on NQ, Mo? About inducement, probably. I have problem read on the lower time frame and how to read these inducements. I think about video and how to read these. It's probably more training eyes. Yes. It's all about training the eyes. I mean, honestly, I was never able to spot, inducement highs and lows this clear until, I've gotten at least 1,000+ hours into the strategy. You guys got to remember, I've been with this strategy at least for almost 3 years now, 2.5, 3 years now. So I could kind of, it's kind of engraved in my head at this point. So NQ, sorry about that. I had all these marked out as BOS. Are you talking about this right here? I mean, I just grabbed the whole range because this is where sellers were originated from. This is where the selling originated from because price reacted off of that candle to sell off again. So I honestly just grabbed where sellers were originated from, and then that's why I marked my BOS, if that's what you're asking. Or if you're saying this right here, I don't see that as a specific or a significant area Because if you look on the 4 hour or a time frame that actually holds some sort of weight, when you look at it, this is where you see sellers induced from. You see a build up here. This is where you see sellers induced from. I just like to grab that high. That gives you a clear depiction on seeing sellers being trapped here. Hopefully that answers your question. How long you need to learn to be profitable? Everybody's different, bro. I see that question all the time, and I see people answer that. I feel like the right answer is just saying everybody's different. It depends what type of work you put in and the time you put in. The focus time, the effort. How well do you learn? That all depends. How to focus more to master ourselves too. Really just cut out all distractions. Really just make sure you're not multitasking. Cut out most multitasking. Really just focus on deep work, time blocking. That's it. Focus is a skill, man. If anybody can lose focus. The more success you get, the less focus you'll get. The less focused you'll get, essentially. I would, Mo, but this is essentially the end of the call. I've already spent my hour with you guys, giving you, my time. So I will see you guys next Saturday. I will let you know if we have anything in the works. But I think Monday's a bank holiday, so stay away from trading Monday. I'll try to have the webinar uploaded in probably the next 2 hours, so I'll let you know. Have a good weekend, guys. I appreciate y'all coming out always. Thank you. You guys are the best. I appreciate y'all.